Hello, this is Alex from DiamondArm. First off, read this disclaimer carefully. We are going to look at a very interesting ETN for our times, and that is the Velocity Shares Daily 2X. So this is bullish, leveraged, VIX short-term ETN. So this is one of the ways you can benefit from the incredible spike in volatility, and the recent performance of this ETN is amazing. However, the volatility ETPs, ETFs and ETNs, they have a very strong tendency to decay over time, which you can see in the chart in front of you. This goes all the way back here. This is way back, 2014, and you can see that it is down minus 99.96%. That doesn't mean that the VIX itself has gone down that much. It's just that these products are definitively not designed for any long-term holding. So we need to zoom in and just look at the price change. I mean, it's just incredible. So here you can see like the open, high, low, and close. I mean, the price change here is just this. It's incredible. So let's zoom in. Okay, so here you can see some more recent numbers. So during the fear we had back here in 2018, let's measure the performance. So from here to here, the 202% in, and that was 87 days. That's pretty good. That's pretty good performance. The most recent move is incredible. So this is, the panic we've had, and let's do some measurements. Let's measure it from here to there. Yeah, 900%. That is really good. 900% is incredible. So during times of panic, this product here can be absolutely a thrill. It actually has been a thrill also for option traders, because option traders, they love these products that naturally decay, because there's all kinds of option strategies that benefit from taking in premium and so on and so forth. So the panic here is just insane. So during any situation where you have incredible fear in the market or the risk of a crash, you can hedge yourself by using this ETN. But as you quite clearly can see, long term, this product is definitively not suited for any kind of long-term holding. It just decays so dramatically. So let's actually look at the VIX while we are at it. So let's look at the CBOE Volatility Index. Boom. As you can see, this one looks rather differently. So let's go far back here as well. Let's go back. So now we are way back here in 2014. So you can see that the VIX, it has spikes every now and then, but this is just pure VIX. So you don't get that decay factor. But let's actually look at some historical precedents here for the VIX. So here you have the financial crisis, where the VIX spikes quite dramatically. You can see that we are pretty darn close to the panic during the financial crisis. The big difference is that this VIX went up like a rocket ship. Look at this incredible spike. But here it's, it builds up. People kind of knew there's something wrong about the housing market. It's very bubblish. Here people are very complacent, and there's just absolute fear. Fear is gripping the markets. Panic. On Sunday, the Federal Reserve, they hit the full panic button. They just slashed rates like crazy. They're going to stimulate, all hands on the deck. Partly it's because of this. This is just one of those black swans. No one expected this. Complacency, pure and utter panic. So let's actually measure the spike here in wicks. So let's go from this level of complacency to where we are now. Yeah, you know, a spike approaching 600%. Yeah. So these are definitively very wild times in the market where it's very beneficial to have these kinds of strategies. As I said, the volatility exchange traded products are beneficial during panic, but they are also very interesting for option traders because they inherently decay. Whatever you do, of course, you want to let the trend be your friend, definitively, in these very rough markets.